All right, we're live. Thank you so much for joining me. I'm Mitch Goldberg. Yeah, we're live for a couple of seconds there. Slight delay in the satellite feed. Okay, so we're live. It's Client First Strategies. Be the boss of your money, and I'm Mitch, your host for the day. I'm actually your host like every day, but we have a couple of things to talk about. Mostly, I love talking about what's in the news, how to interpret it, and coming to the conclusion that sometimes the best thing to do is nothing. Sometimes the best thing to do is something. So, let's have a good show today. We're going to talk about oil. We're going to talk about what does it take to become to become a client of a financial advisor. I put out a couple of questions or invitations to ask me a question, ask a financial advisor, and I got a good question from another financial advisor, and I'm kind of happy that Brian Trugman responded. So we're going to show you that in a few minutes, and we're just going to go through a quick rundown of the markets. We finally had a pretty decent down day in the market. Does this mean we're going to hell in a handbasket? Or does it just mean the stuff going on in China? Because that's the big story of the day, the China rebellion. People are just rebelling against strict COVID lockdowns and horrible living conditions as the culprit. So let's start the show. We're going to get into all this good stuff while you're watching, certainly. And if you're watching in the replay, either one, give us a thumbs up or a heart or an applause, whatever reaction is available to you on whatever social media platform you're watching on. It helps to spread the word about the show. Your friends will see the show. Maybe they'll watch it. It's all educational. And of course, if you have any questions, anything money related, certainly the things we're talking about now, please hit me up in the comments. I love hearing from you, and I will get you that answer. So here we go. We're going to roll the intro right now. Thank you for joining me. I'm Mitch Goldberg. Give us a thumbs up right now while you're watching the show. It helps get the word out to other people in your network that you're watching the show. It helps spread the good word about the good deeds we do here. This is all educational. Okay. It's not sponsored. I don't take money from product pushers or anything like that. It's just all me, what I've learned in over 30 years of being a financial advisor, working directly with you, with the end user of financial services, you, the client. Okay. Not some institutional account, not some hedge fund or mutual fund. I deal with you directly. I've been doing this a long time. I just know so much. Sometimes I actually trip over my words because I'm trying to get too much out. I'm trying to say too much. So let me just slow my roll. And thank you, Natalie, for that expression, by the way. Natalie, I'm going to call Natalie my chief producer and editor of the show. Yeah, that sounds pretty cool, right? So we will take a look at a couple of things. First, what's happening? Okay. Lockdowns in China. They had a couple of deaths, like 2 or 3 deaths in Shanghai. Uh, it looks like it's getting harder and harder to contain the spread of COVID. As a result, lockdowns are very strict. And it was just, China was just starting to take their boot off the throats of their citizens in terms of lightening up on lockdown measures. But now they're putting their boot back in the throats of their citizens. And, citizens there who work, for example, in factories that produce iPhones, these people are told you can't leave. They're set up like dorm rooms. You're not allowed to leave. You have to stay there. And it stinks, defecation, garbage. It's piling up. And it's just like deplorable living standards. And a number of cities are really getting hit hard by these lockdowns. People are rebelling. Citizens of China are sick of it. And they're not even having basic human rights met, nor basic human needs. And it's a real problem. Okay, it's a problem and it's a humanitarian crisis, but it affects our markets as well. So another reason to be concerned. This is the money angle. Okay, I know that's not the important angle, but it's why we're doing this. Okay, from a money angle, it seemed like China was starting to, start getting back into producing, manufacturing. It would, excuse me, it would help the supply chains around the world ease up a little bit, make supply chain problems go away, and it was going to make everything better, lower inflation, uh, better again, reopen supply chains. And basically, if you go shopping now, everything you want is on the shelves. But do we go back into shortages again in a few months because of this? Do we have another jump in inflation you know because prices are going to go up again because all of a sudden there's a shortage of goods? And that's what people are getting scared about, that we're going to have another major China lockdown, which is why the price of oil has gone down. And I'll show you the headline on that. So we have Phil out there. Phil with the thumbs up. Thank you, my friend. I greatly appreciate it. Everyone out there, you know, smash that like button, and helps to spread the good word. If you have any questions, ask me in the comments or just say hello or, share your favorite emoji. My favorite emoji is the bucktooth guy with the glasses. I'm partial to people who wear glasses for some reason. So that's what's happening. So China, it hurts global manufacturing, and companies with massive manufacturing operations in China could get hurt. It's one of the reasons why Apple was down today, and it just disrupts supply chains all over the world. So that's the problem. It creates shortages again, and that's why that's a problem. And that could hurt corporate earnings. It could hurt the economy, a number of things. Okay. Let's take a look at the big headline today. This is a significant headline. Okay. Defying forecasts, crude oil prices have wiped out most of this year's gains and could head lower. That's a pretty substantial headline. Okay. And it just goes to show you how wrong people are. And I just, on a side note, I was just looking at something that showed like the top, it showed 15 Wall Street strategists year-end target for the S&P 500. And they were all 4,400 to like 5,400. And they were all wrong, obviously. I mean, they were all wrong. And that's why I say I don't knock people who make an earlier forecast. I make them myself. But it's just a guidepost. And if it's just a place to start. It's like starting a new journey. I don't wait for the perfect direction, the perfect weather, the perfect anything. I just start by putting one foot in front of the other. And if the conditions are cold, I put on a sweatshirt because I have it in my backpack. If I need, better hiking boots, I got them in my backpack. Like I just am ready to be flexible, bounce off of obstacles, over obstacles, under, around, whatever I have to do to get along in my journey. And sometimes I just change direction. And sometimes you just realize that the destination that you thought was important earlier in life just isn't that important after you reach a certain age, which is, by the way, one of the best things about turning 50. I'm well past 50, but one of the best things about turning 50 is a lot of the bullshit that was important to you in your life goes away and you reach a level of, I'd say, happiness. And people who it doesn't go away for, they get old and it seems like, dissatisfaction, bitterness. What can I tell you? They become verbisna. Verbisna is a Jewish word for angry and bitter. So verbisna, if someone's angry and bitter and complaining, you could say to them, "What are you being so verbisna for today?" And they'll be very impressed that you know the word. You might even get a laugh out of it. So again, use that word. I've got all the Yiddish Jewish words for you if you want. I'm like a Yiddish dictionary. Okay, so let's move on. I want to show you something. Okay, I posted this earlier today. I don't know if you could see it that great on your little smartphone there. Okay, but let me just refresh in case somebody else came in with another question. All right, but I posted this before. Got questions? What would you like to ask a financial advisor? Let me know in the comments below, and I'll answer you during my live stream. Be the boss of your money at 4:30. And if you want your identity to be hidden, ask me in the DMs, and I won't mention your name. All right. So the two comments I got. Let me see if I could make this a little bigger. All right. All right. First one, I'm going to start with the second one first because it's pretty funny. Um, and I'm going to reply, LOL, I feel ya. Okay. Send that out there. Okay. So Lori says, do you have access to a money tree? LOL. If so, I would like to plant one. My kids think they exist. I know what you mean. I know exactly what you mean. And I love the hashtag money don't grow on trees. That is a great hashtag. I have to say, I really like that hashtag. Okay. So money doesn't grow on trees, and we have to constantly I find with my own kids that yelling and screaming or getting frustrated or letting them visually see me annoyed about a money matter in my household doesn't really work. The only thing that works is a hard no. I find my kids don't really get too upset if they see me upset because they spent a ridiculous amount of money on DoorDash for like the fourth time in a week. Or if they, if I gave one of my kids $500, go buy clothes, and they got like one pair of sneakers, a bottle of cologne, and a few little pretzel bites from Auntie Anne's or something. You know, they don't care how pissed I get. They just, if it doesn't affect them, like if it's not a hard no, it doesn't matter. So I do my best to teach them about money, and I know there's lots of books and commentators. People say, oh, this is how you teach your children about money. I've tried all of those. And if you have kids in the real world, it's not so easy as reading a book and say, you just have to tell them. You just have to give them little examples. No, no. You have to reinforce stuff like over and over and over and over and over. And it's not easy. So I feel you. Okay. The other one, other question. Okay. This is really a great question. It comes from a friend of mine, Brian Trugman, who is also a financial advisor, I believe at Attitude Financial. And he asks, what kind of mindset should one have in order to work successfully with a financial advisor? Let me repeat that because it's so good. What kind of a mindset? Okay, what kind of mindset should one have in order to work successfully with a financial advisor? This is so important. So I would say the mindset for an individual, first of all, is they don't have to be rich. Like you don't have to say, well, I'm not going to work with a financial advisor until I have a lot of money. Attitude is everything, and that's why Brian's firm is named Attitude Financial. the I think the mindset is the mindset is you have to be prepared in a few ways to work with a financial advisor. The first thing is you have to have pretty good personal finance skills to begin with. We financial advisors can only do so much in a day with so many clients, right? And as much as like I know many of us would like to be more like coaches and coach people through becoming better with their money. And that's important. And I create a crap ton of content about that. But it's hard to coach everybody with just the basics. And usually by the time people come to a financial advisor, they have a lot of the basics down. They spend less than what they earn. They already understand that their biggest bill is taxes. They typically understand what if they have it or not. They understand what's important about life insurance. They understand that they have to save for a rainy day. They understand what an emergency fund is. These are the things that people have to go through. I've actually had plenty of situations, especially as I've gotten older, more advanced in the business and built a bigger clientele, because the beauty of being a little more experienced is you're not eager to take on anybody who has a pulse as a client. And you start to get to the point where you can pick and choose your clients. And so I recently had someone come to me, a substantial six-figure portfolio, and it was over half a mil, and it was a nice portfolio. And I liked the person who owned the assets. I couldn't take the account because the portfolio not so long ago was 1.5 million, and then 1 million, and now a half a million, a little over half a million. And I could see that there's no amount of good financial stewardship that I could provide to this client to help them because their living expenses were so damn high and there was nothing that they were willing to do about it. Not I have to live here. Not I have to drive this. Not I have to. And it was just running into that obstacle. I'm like, why am I going to do all this work for someone who's not even going to be my client for more than a year or two? And they're going to take so much of my attention away from my other clients. Because, when you bring on a new client, you're diluting your attention span. You're diluting your services to all of your other clients. So it better be a client that fits within a range of skills and attributes that I desire so that I could continue to service everybody to a high level. So some of the other things that someone needs to do is as a client, they need to understand delegation. Clients often become my client when they hit their high 30s or 40s, and they realize I have a lot of money now and I don't want to screw it up. I need to make sure that I'm investing properly, that I'm not taking undue risk. I need to make sure that I know what's next. Like sometimes you're ready for a trust account, update your will, insurance areas. There's so many things that need to be that have to have a look see. Okay. So I know what's coming up in someone's life. Like I know what's next for you. It doesn't mean I know what you're going to wear next week or what you're going to have for dinner in 2 weeks. But based on where you are in life, I pretty much know what the next phase of life brings for you. Okay. I know what the next, I know what the next level of financial complexity is going to mean to you, do to you, and how to handle it for you so that you could be confident that you're making the right decisions for yourself. These are the things that a financial advisor brings to the table. It's not just saying, here's 10 stocks and I'll call you if I need you. And it goes way beyond that. So that's the attitude, more or less, of what people need to do. People need to have good financial habits before they become a client. Now, I'm not saying they need to have them developed. I mean, someone who's 25, for example, might not have the best developed financial habits, but their heart's in the right place. They understand the concept of saving money. They understand the concept that after you save enough money for your financial needs over the near term, you need to start investing. They understand that a good day for them in their investing life. Let me rephrase that. If somebody thinks a good day in their investing life that's going to go on for years and years and years is an up day in the market, and a down day in the market is a bad day in their life, in their journey of life of financial planning and investing, it's probably not someone who's going to be my client. We're looking at the long term. Down days and up days are part of the same journey. Success and failure are part of the same journey. They're not separate. So if somebody says, "Oh, it's tough," it's a bad year, so we're not doing well. That I don't get that. It's a bad year. We're looking at a 20-year plus time horizon, and you're telling me that. That's why I ask people that question. How do you know if we're doing well or not? Well, if I'm making money, I'm doing well. If I'm losing money, I'm not doing well. And it might sound, I don't know what the word is, cool, or they might think it sounds smart in their head. But when I hear that, the person sounds like a moron. You sound like an idiot if that's what you say. If that's how you judge it, I'm already not taking you as a client. It's a bad attitude. It's not the attitude that works for an investor. And I can't stress that enough. There's a lot more that goes into it to become a client, but I find that I have a desire, I haven't done it yet, but I have a desire to work with financial coaches who will get my clients in shape to then become a client. Just because you have a rollover of, let's say, $300,000 rollover from your 401k into your IRA, I've had plenty of clients that have sent their rollovers to me. I mean, so much of the assets that I manage are from 401k rollovers, into a self-directed IRA that I manage. But I've seen so many people over the last 30 years, they just take the money out and use their IRA as a piggy bank. Not as a piggy bank, they use it as a cash register. They take money out when they want. I'm like, that's not, to me, a good client. Like if you invest and you can't leave the money there and you're not thinking long term, you're not really meant to be a client of a financial advisor. I mean, there's a lot more to it, and Brian and I maybe will do something on this one of these days. Quick question out here from Carmine. What is your thoughts on real estate investment online through a company like Fundrise? All right. I I've heard of Fundrise, and I'm familiar with the concept, not because I know about it a lot, not because I know it well, just because I've heard about this, investing online directly into real estate, but online, which is similar to, I guess, a private placement, what have you, or investing in the, not just doing it online, but with actual paper documents to take ownership in small amounts of property. I don't know enough about it to say yay or nay. I do know that you have a risk tolerance, a time horizon, you have money that you have to be able to say, if I lose it, I'll be okay. And that's how I would look at something like this. I don't know what the fees are. I don't know who's making the decisions. I don't know if there's actually real estate to buy in these investments. They all look good on paper. They all look good on their website. They all look good on their brochure. So it's just, I'm going to say, buyer beware. And typically, when you get into these kinds of things, there's lower regulation, which means often lower protection, lower shareholder rights or real estate holder rights, whatever you want, or unit holder rights, whatever you want to call yourself in this. So buyer beware is the best I could say. Now, this is not a general statement on whether or not you should own real estate. Some of the wealthiest clients I have made their money, in many cases, in real estate. And many of them made it in the stock market. Many of them just made it owning their own business. And then by the time they come to me with cash, they're not looking to make more money. They're just looking to preserve what they have. So that's that. I want to show you something else. Another comment that I got today. Okay, I posted this on Instagram. Can you see that? Let me make it a little bit bigger. All right, I made this. You see that? Can you afford to retire? With the caption. Where's the caption? I'm on Instagram on desktop. I just want you to know I never go on Instagram on desktop, but it's the only way I can really show it to you. The caption was, if you need help solving this puzzle, reach out to me because that's what I do. Can you afford to retire? Obviously, I left out the D because it's Wheel of Fortune and you have to leave out a letter. And then you say, I'd like to solve this puzzle. And I'm saying metaphorically, if you need help solving the puzzle, meaning for your own investments, then we need to talk. Okay. Who is out there? Candace is out there. Hey, Candace, thank you so much for joining me, friend. So anyway, I posted this and I got a couple comments back. That's so not what I wanted to do. Maybe I made this a little too big. Okay, yeah, I made that too big. Okay. So here's what I got here from Felice. It seems like the carrot keeps getting further away from the horse. I think about retiring, but realistically, shake my head. Not with the way inflation is going. Yeah, not with the way inflation is going. I completely understand that and sympathize. Look, I'm a spender. I'm a consumer. I'm a moneymaker and a consumer. So, I eat like you. I fill up my car like you. I pay my real estate taxes. I do all that stuff. Got my oil bill last month. It was like $1,500. And that hurts. And you've got to take the money from another part of your life. So I hear you. And that's what inflation does. It pushes things further out. You have to lengthen your time horizon. And then you invest to overcome the deleterious effects of inflation. But then again, because of inflation, great. So instead of losing 8% on your cash to inflation, you're losing like 30% between inflation and the stock market being down. And that's not so palatable either, which is why we invest for the long term. But I hear what you're saying. And it's really tough out there. And I think a lot of people are going to be extending their time in their working years. And I see a lot of that. I think that's one of the reasons why a lot of new job openings aren't coming up, because people, they're not only working longer, but they're living longer. So I wish I had a better answer for you. But the fact is, if you can't do something to make a lot more money, then what do you do? I mean, if people think they're going to invest their way out of a not so great financial situation, good luck. Now, I'm not saying there aren't people who invested into a new business venture and made fortunes out of it. That's what I'm talking about. I'm talking about people who decide they're going to jump onto the crypto bandwagon or the pot stock bandwagon, what have you, and they're just going to buy those, and it's a new frontier, a new market, and they're going to make all this crazy money, and then they're going to get out just in time, and then they're going to put all their money into bonds, and they'll live happily ever after. Never happens. I've never seen anyone do that. I have never, in 30 some odd years as a financial advisor, I have never seen somebody make up for poor savings and financial habits on the back end. Like, I'm 60 now and I'm just going to have a couple of good years. I'm going to invest that money and make everything I need to make. No, it doesn't work. You really have to start younger, much younger, and invest little by little over time. And for those who want to play the catch up game, you know, I prove me wrong, but I have yet to see any of that work, which is why I'm such a disciple of, investing for the long term, starting early, investing regularly, protecting your downside in terms of a plan. I don't mean protecting your downside in terms of, jumping in and out of the stock market or using options or something or other derivatives. I'm talking about diversification. I'm talking about asset allocation. I'm talking about literally not looking at your account so often and just let time do its thing. You can bother for diversification. You have to always have to say this. Diversification doesn't stop your portfolio from going down in the generally down market. Okay. And you cannot invest directly into an index fund, but you can invest in a security that tracks or mimics an index. Okay. So that's what's going on over there. Let me see if I have any more stuff out there. No, we're good. All right. So let me take a look at what's going on today. We're almost done, guys. So the Dow down about 500, Nasdaq down a little bit more, about almost 1.6%. S&P down 1.54%, but everything was down about 1.5% in the major averages. Gold was off a little. Oil rebounded a little bit at the end of the day, but it still was just about 90 recently. So now it's in the just about mid 70s. 10-year yield is down again. We need to take a look at that. The VIX is up a little bit, but that's because the market is down. And let's take a look at bond yields. Let's take a look at bonds and rates. Let's look at Treasury. We look at this every day. But do you see this? Yields are down across the board, and they're down a pretty good amount. So I am grateful that I've been talking about the 2-year Treasury constantly on the show and constantly with clients, and for everyone who it was appropriate for, we have short-term Treasuries for a good chunk of our cash. Okay. Now, if you have cash and you need that cash possibly in 15 days or 30 days or something, I'm not putting that into a 10-year Treasury. That's going to stay in cash. But if you have money, you're not going to touch for a year or 2 years, but you want it in a super safe place, a Treasury bill or a short-term Treasury note is a very good place to be. So yields are down across the board. The 10-year down to 3.6. I was just in the 4.1, 4.2 recently. The 6-month is below 4.7. The 1 year is still pretty good, 4.74%. That hasn't gone down much. But, people are missing out if they're just waiting for higher yields. And this is why I say, don't try, timing the bond market for, timing the bond market to get a higher yield is like timing the stock market to get a better price. You're taking the risk. Odds are that it's a 50-50 shot at best. And if you have, if you bought T-bills, 90-day T-bills a few months ago when yields were much lower, you'd be doing fine today because they would have already matured. You would have rolled them over into, or reinvested into new T-bills. They would have matured and you keep reinvesting. So don't wait. If you're sitting in cash earning next to nothing, is it smart to wait another 3 to 6 months when you could be earning interest now? And now with short-term yields 4% plus across the board, I don't think so. I don't think it's a great strategy, providing you could leave the money set aside. But yields are definitely coming down, and crypto. So, well, we had another blow up. FTX death spiral, spell doom for BlockFi. Let me put that up there. Okay. How FTX death spiral spelled doom for BlockFi, according to bankruptcy filing. So crypto is down again. And again, I want to say that this is not something that crypto did. It's the mechanics of the crypto market. It's the people that manage the accounts, the crypto accounts, the trading. This was a people problem, not the crypto technology problem. Now, whether or not crypto is a viable replacement for currency or not, which I don't think it is now, we'll see how things develop in its current form. No, I don't think so. But this is a people problem. This is a trust problem in the Wild West known as the crypto market. And I think that is about it. Thank you very much for watching. I really appreciate you taking the time. I'm going to get going, and I'll talk to you guys tomorrow. Okay, bye bye.